All right. Good morning, everybody. So Bitcoin's literally testing daily support right now. I don't know how long we'll be able to go live, but I just wanted to go live while we're actually testing a relevant level. So far the VIX is, it's bouncing a little bit, but the S&P 500 has tested the upper edge of the expected weekly move. This week was a smaller than expected. It was a $62 expected move this week. There's not a lot of high impact news outside of I think the BOE might have a little bit, or might have a rate decision. I'm not sure if it's them or the pound, but I mean, they're not going to do anything. So I wouldn't expect that to even be very much of a big mover, not in terms of the S&P 500, but potentially for the euro. We'll keep that on watch, obviously, and that'll be Thursday. But other than that, there really isn't anything happening this week. We tested trendline resistance on last Friday, and so far we haven't really done anything. Today we're just barely outside. We did take out yesterday's low, but we are basically just trading as an inside day. Small ranges. Yesterday was a small upside day. Actually, it was a pretty decent upside day. We did end up taking a TLT long, and the small account is now up. It's at $762. So basically, it's around 14%. So we're beating the S&P 500 by double. Right here's 2024's yearly opening range. And basically, with the small account, all we're trying to do is just beat the S&P 500. Well, the S&P 500 is up 9%, but we're up 14%, 15%. We're doing pretty good. So yeah, a current trade position is we took a TLT long here on this day right here. And this was the lowest area that I was going to hold the trade, 89.28. We discussed this, I think, on Sunday, but we were able to get long and on Friday, and we're just basically holding it. And now we're finally getting that push up. It is a bearish structure, so I'm not wanting to hold it very long. If I can get it up to like 91.23 today, I'll probably close it, because in a downtrend, obviously these upside spikes are generally when people would look to sell. But with that being said, everything is actually structured for the market to stay bullish. What I mean by that, hang on, let me see here. What I mean by that is simple. We had the VIX pull back quite a bit, and skews pulled back, dropped down to that 130 level. We won't get the next skew print till the market close this evening. We'll see how it works out, but I would love to see it drop below 130. Anytime you have a skew dropping with the VIX, that typically means upside for the regular marketplace. And then if we go over here and we look at the bonds and the interest rate or bonds, you can see that the yields are pulling back pretty heavily, which is also a bullish scenario for the marketplace. How long it will stay like that, I don't know. Here's your 30-year bond, and then your 20-year yield, you're pulling back. We're still massively inverted on the yield curve. So there's your 10-year 3-month, and then here's your 10-year 2-year. Still inverted. I mean, this is one of the longest periods of inversion that I can remember. This is insane how long it's been inverted, but I know a lot of people are expecting a bear market based on this, but as of right now, we're not looking for bearish markets. There's really nothing out there that suggests that we would be looking for downside plays. Now, as far as today, one could potentially sell a call or buy a put based on the fact that we are testing the outside of the weekly expected move. And typically, whenever that happens, it does offer up an opportunity. But I like it better when the market's bullish to look for bullish opportunities at the bottom edge of the expected move. You can see here this week it actually broke through the bottom edge of the expected move, but last week gave us an awesome opportunity. This is the Fed day candle right here. So if you remember, it was really, really bullish, but then it dropped all the way back down. So essentially what I did was I waited for this low to be taken out on this day, on this push lower, and then I got long. And that trade ended up working out beautiful. I didn't hold it more than this day here. I took it off on Friday. And then we also shorted, or I also shorted oil here on this day. So you can see that trade actually worked out phenomenally as well. So those are essentially the two trades that I took that literally took the account up really nicely. So that, I mean, you literally only need to hit one or two good trades and it can turn your whole account around. I mean, this account has been struggling pretty much all year because, well, it's the beginning of the year. I obviously got to focus on my main accounts first, but so I was struggling with the small account, but it is up now. So we're doing fantastic on that point. And it's just going to get better, right? I mean, it's just going to get better. I love two-sided trade. When something's just going one direction, it is really difficult to try to get long because you're always afraid that you're buying the top. You know what I'm saying? So like it's a little bit difficult to get long in a marketplace that's completely massively overstretched. All right, so as far as selling a call today or buying a put, you would be doing that for essentially just a day trade, right? Because generally when you're pushing to the upside, when everything is screaming bullishness, you don't typically want to short a market that's bullish, right? The opportunity would be to wait for a pullback to the bottom edge of the weekly expected range and then look to get long. So, but right now, Bitcoin looks like it's actually struggling. If we pull up the RSI, you can see that it is literally at the area where typically we would be looking for shorts if the market was, bearish, and it has made lower highs and lower lows. So we're kind of seeing right here, right now, is this going to be an area where Bitcoin pulls back or rolls over and starts to push back down into the lows? If that happens, then the S&P 500 may also push lower. All right. So we were bullish for many days in a row now. Today, I could absolutely see it close lower. Just make sure you know what you're risking and make sure you're not risking a ton of money on the short because this could absolutely get bullish today. If I put you over here, you can see this is the daily expected move. These two white lines here, this is what is actually expected for today. So in a bullish market, you could continue to push right on through that. But you can see the reason I'm not looking for a short right now, even though we're at the edge of the weekly expected range, you're right in the middle of the daily expected range. So there's not really a trade to take. There's literally, for me, right? There's no resistance level that I like here. There's a resistance level above at around 5,200. But where we currently are, the literal only reason that I would even think about a short would be that upper edge of the expected. But it would play out a lot nicer, in my opinion, if we were also testing the daily expected high. And there's also a daily res up there as well. Let's get rid of this line. So these two white lines right here are the daily expected. And then this green line is the weekly expected. But no resistance level. So we'll give it some time to see if it can push up. And if it does push up there and hit the daily expected and show any signs of weakness, we could potentially then sell a call. And let me /MES. Let me but it would only be like a few days. Like I would only be looking to sell it like 3 days out or something. If there is enough premium to take at that point. If there isn't, you can go out to 8 days or 7 days. That would be next week. We could potentially sell a call up in here like around the 5250s. that would generate $70. And if we do get a pullback, just for the day, we can close it out at the end of the day. One other thing I'm looking at here is we are breaking out on uranium. On URA, we're at daily res. We're testing a breakout region. So you can see that you are at 3-year highs. Longer than that, actually, since 2017. So 5-year highs. So this is a potential legit breakout trade here. But it has to close above before we can think about even taking it. And what we could do is we could buy a call, on that. I believe they're cheap enough. Let's go out 38 days. Yeah, they're cheap enough to where you could manage risk easy. So if it were to get, like, say it closes up here today above 32.22, which is the daily res, if it closes above, that would be a daily breakout. It is a nice consolidation formation down here. So if it is going to break out, you could push as high as $35. And that would be a nice little trade. So what I would do is if you close above resistance today, at the end of the day, before the market closes, you buy that at the money call 38 days out. Your platform may be different, but you're looking 34 days out. The implied volatility is under 50%, so we can buy it. That's going to be June 14. And then tomorrow, if it gaps down tomorrow, you just close it. All right? You just close it. Now, there isn't really any way to manage the risk. You'll just lose whatever you lose on that trade. But if we do close above today and we are able to buy it, if it does continue with a breakout and gives us 3 or 4 good bullish days of continuation, then it would be a decent trade. You're not going to lose the entire premium if you go out 30 days. 38 days. You will not lose the entire premium. The best way to show you how much money you could potentially lose on this trade. So if you say buy the $32 strike, you're going to pay $180 for it. And if it drops a whole dollar, you're going to lose what? If you pay $180, you're going to lose it. You would actually sell it back for $135 on a dollar drop. That's not bad, right? That is well within a 1% parameter as far as on my account or for the small account. So literally, this thing could gap all the way down $1, like down into here, and you would only lose 40 or $50 on the trade, is what I'm saying. So you just have to ask yourself, is that a trade that you want to take? Generally, we don't do breakout trades here because too many times, you can even see here, right? This would have been the area, and we got a nice close above. It would have been buying that day, and then it gapped down the next morning. So that would be that's where you would attempt to sell. And you can see that it sold off pretty hard. So you're also at the top edge of, the range as well. So it could literally drop right back down tomorrow. But just wait on the close today. A close above would be a trade to take. All right? That's pretty much all I see for today. Vale is doing good. Val. I don't remember how to pronounce that, but oil's down, so we don't need to look at that stuff. Let's see what Duo actually ended up breaking out yesterday, but you could see the gap down today. One could potentially take this trade as well if you wanted to. I'm not. There's no weeklies on this. So I'm going to leave it alone. Cloudflare is not doing very good, but this could be a pullback. This could be an area to look to get long. The trade desk did break out yesterday. No, it did not. Yeah, it did. It did. It closed above, just barely. So a few of these longer term consolidation formations are starting to break out right now. So you got uranium or URA, which is just ETF that tracks uranium prices. I like this one the best because it's cheap. It's got weeklies. The implied volatility is low. It meets pretty much all the parameters for a breakout trade. Dual does too, kind of, and so does the trade desk. But these are a little bit more difficult. And I don't like this formation on the trade desk. I want to see a legit breakout here. Last time it tried to break out, it was a rejection. Gold, you could look to play the miners here. I got Anglo or Ashanti. It's still in consolidation. I don't like gold just yet to the upside. But it has broken out of a descending wedge. But I don't like that descending wedge formation either anyways. But if it holds support today, then you could potentially buy a gold miner cheaper than actually playing gold. Or you could trade options, which is that's how I would trade it. I would get the AU options, call options, or AEM call options. AEM is actually doing a lot better than AU, so I'd probably take the AU trade. The AU trade would be much easier to manage risk as it's a cheaper trade. It moves a lot slower. TLT's pushing up, which is nice. I want to see it continue to push up. But like I said, this trade is getting near the end of the road because obviously it can roll over. It is in a bearish formation and it's bearish on the moving averages as well. I mean, it's bearish, right? It's bearish. But if the yields continue to go down, then we might have found a bottom here. If I pull the weekly chart up on TLT and show you the volume on this thing, like the volume got real heavy as it made the lows down here. So it does look like people were trying to accumulate this, and it could ultimately have found a bottom. But we won't know until time goes on. So it was just a good place to look to take the trade. And that's what we're working with right now. I'm not expecting bullish continuation. I'm not expecting it to find a bottom and then just run forever. But it would be nice if it did. Obviously, anytime you're in a position and you're able to buy it at cheap prices and it then turns around and goes back to the upside, that's always lovely. Good morning, everybody. Hola, amigos, says Carl. Yeah, I'm not looking for shorts on gold. I have a short bias to the dollar. And as long as I have a short bias for the dollar, I'm not going to be looking for short anything versus the dollar. It does look like it's holding support here. And I know a lot of people have, difference of opinions with me on this right now, but I mean, the jobs number we got Friday was really clear, and it basically saved rate cuts for this year. Now, it doesn't mean we're going to get them, but it was looking like before Friday there wasn't going to be any rate cuts. But that jobs number literally turned that around, hence the reason why I got long S&P. But I mean, plus the technical setup was just there. And typically, I'm not a macro guy. I usually just trade technicals, and I do okay doing it. You know what I mean? But with the macro outlook right now, the dollar, it just looks to me like it has room to go to the downside. If the skew stays up high, then that tells us, that there's more hedge activity going on, more call selling going on. Then in that scenario, then I would probably say, well, the dollar might go up, but it spent quite a time up here. It spent quite a while trying to break out of this, and it was just unable to do so. And then we had the Fed, and then we had Friday, and literally this was a deep push on Friday, but most of it came back. This is an area of resistance. Old resistance levels can act as support. It is currently doing so right now, but I think we will ultimately see it break down and ultimately get down around the 104.7 mark, but it's just a matter of time. The way I'm looking to play that is with Euro USD. But it's struggling right now. And it's hard for me to buy it when it's at resistance also. We don't like to buy at resistance, and we don't like to short at support. We typically don't usually trade breakouts either, but in stocks, breakouts work a little bit differently than in Forex. So that's why I am looking to potentially buy uranium this evening. And remember, if you're just catching up to the stream, we're watching uranium today at this price right there, which is 32.21. If we close the day above 32.21, we are going to trade that via calls. I'm going to buy the 38-day expiration. I'm going to buy that in the money, right in the money, the $32 strike. Looking for, 2 or 3 days of bullish continuation for the breakout. If it gaps down tomorrow, because we're not buying it until the close, it's the close that matters on a breakout trade. You need that daily close above the breakout area. You get that close above, you can then buy the call right before the market closes. And then tomorrow, if it gaps down, you can close the position. We've already looked that a $1 move is only going to be like a $40 or $50 loss, that's a very good risk-defined trade. If we lose a little bit more than that, if it gaps down a lot more than that, then obviously we're going to lose more. But this thing doesn't really move that much. You know what I mean? So I think we'll be fine. But like I said, it's not a trade if it doesn't close above that white line. You just pass. And then Bitcoin right now is currently testing daily support. And it's yesterday's close that makes the support. Would also be today's open. Intraday price action does not look good. And the fact that the S&P 500 is testing the top edge of the expected range right now, maybe it isn't a long. But if you did want to get long Bitcoin, this would be the price to do it. Your stop loss can be tight, but you can get wicked out on the next hour. But if it holds here for 2 or 3 hours, then I would probably get long and then risk the low of day. Or yesterday's low, one of the two. This is going to be yesterday's low over here. So you could literally put your stop under yesterday's low, buy there. You're only looking for it to get up to 64,249. That would be a 2-to-1 risk to reward. All right. USD CAD, we're kind of watching this to see if it wants to roll over. But once again, you're right at support here. And this support has held for 3 days. It actually got tested 2 days, but It's still holding. So getting short right here is kind of, kind of iffy, but I do like it lower. USDJPY, we may be able to short this as well. We'll keep an eye. 154.718 is daily res. It's old daily res. This is the daily res in question. Because you can see how it held. Then you broke down, which was just what we call a bear trap. This gets people thinking that it's going to go down. And then you have this, which indicates that this, in fact, was a trap. Then they bought it on this retest, on this day, right there. That's when the buyers stepped in and up it went. So here's the breakdown. Retest. We want to see it start to roll back over. So this is the area to watch. A daily close above means we're not taking that short either. But right now things could pull back. It's just a matter of time. We just have to keep our eyes peeled. And I got all the charts that I'm watching up top. Oil might be actually coming into support here. So it had a nice run down. We'll keep oil on watch. And if we do take the long, it would be just for a bounce play, nothing more. I have a bearish bias on oil as well. I know a lot of people are looking to be bullish on oil simply because, the things going on over in the Middle East and all that. But the market's generally going to be, I just think that oil is going to be staying low just for the simple fact that we're in an election year. And if they, the U.S. can heavily affect the price of oil. And they may do that, you know what I mean? If they can get oil down low, then that would help inflation also come off. It would like pan the books, if you will. Make it look like he's doing better than make it look like they're doing better than they are. So that's how I feel on oil. So if we were to buy it, like I said, if it holds support today, and support being right here, if it holds this on a closing basis, then I could look to get long to there, right? It would just be a range-bound intraday trade up into the top edge of the range, which is just resistance. And then I would bail. I would get out of it. I wouldn't be looking for it to hold. But I don't really like taking trades based off of these ascending trend line support levels because they don't really usually work as good for me as looking for objective price points for support and resistances. Anybody who caught gold scalp on open probably started taking profit. Well, I mean, like I said, as long as the dollar's weak, gold will probably be a little bit strong. It's just not right now. It's just kind of, it does look like it's trying to break out a little bit, but you closed above this daily close. So, if anything, you should have been looking to buy gold at the low of day or around the low of day, but it doesn't mean it's going to hold either. I definitely wouldn't have been shorting it down here. You typically don't want to be looking for shorts at the low of day. It's generally a good rule of thumb, right? You don't want to get short the low of day. And 23.15 is pretty much, it wasn't the low when you took the trade, but it was close enough to the low. I would not have attempted that short. Now up here, that's a different question, right? Up here, you could potentially look for the short, and you would just play it down to the bottom edge of the range. Or that's what you would want, right? Trades up in here, rejects, could even reject here. Then you would look to play the short back down to the range support. A close above means you leave it alone because it's got bullish continuation. But if oil rolls over and inflation starts to come back lower, you might see a lot of the gold longs start to unwind their positions. Maybe, maybe not. Right? That's the more macro view that I don't generally look for. I mean, the technicals have worked for me, so why, if it ain't broke, don't fix it, is basically the way I approach trading. If I can catch a 3 to 5% or 0.3 to 0.5% move on gold, that's a good trade for me. All right. So that's that. USD JPY is up 0.3% on the day, so it does have a little bit of bullish strength, but it is right up against the resistance level. So if it does close an hourly above this white line here, then I would watch the next hour to see how it plays. Do you close higher? If you do, then it's obviously moving up. You don't want to short it. But if it closes lower, then we could take the short, expecting this to be a potential trap. But it has already moved down pretty significant. So they would almost need to intervene again. And they, in the past, they don't do the intervention until the evening. Well, the last 2 times they intervened, they did it in the evening time. Like right at the stock market close, I think, is when they intervened on this day, 4 p.m. And then on this day, it was later. We'll have to just wait and see on that. S&P's just basically not doing anything today. Very small range. Definitely struggling there at the weekly expected range high. I really, really wish that it was at the daily expected range high as well. And we could trade that either via the spot market like this, just get short 2 or 3 contracts with a risk up high of day, or sell calls. Selling calls is the better way because it's easier to manage risk and it doesn't move quite as fast, which is what you definitely don't want. You don't want fast movements, not when you're looking for trades. So Bitcoin's struggling to hold the daily support right now. Let's see here. I think I'm going to attempt a long position on Bitcoin here. Just see how it plays out. All right. If it continues to make lower closes, like on the 5-minute time frame, if it continues to look like this, then obviously you can just exit the position. It doesn't look like a long, but I mean, intraday price action is always choppy and garbage like. But the ranges have been smaller, so on Bitcoin here lately. The halving is supposed to make that happen, right? But we'll see if it plays out. Be nice if the DXY could continue with some downside here. That would give us a little bit of help. Looks like it may be looking for a low of day. Mara actually had a nice move up, but I would expect that to roll back over. I don't know why it bounced. I guess it just looks like to me like a short covering rally because Bitcoin hasn't rallied. But I wouldn't trade this because the earnings is just way too close. Last time they beat earnings and it still sold off, but it did gap up slightly. A slight gap up. Let's see here. We did have Aussie dollar rate decision, and then it ultimately had a nice move to the downside, but it has retraced a lot of that move already. But if you think Aussie dollar is going to continue to go down, this is a good, decent little area to look for a short setup. You got supply right there, intraday supply at resistance. So if it does hold, one could potentially look for a short on Aussie dollar, but that would be, hypothetically, that would be the exact opposite of what we want the dollar to do. But Aussie can be weak as same as the dollar. Like they can both be down on the day. Let's go look at uranium, see if it's getting any kind of bullish momentum here. And of course, I also want to keep an eye on TLT. As that position has the account up 1%. A little bit better than 1%. But it's only a 25% gain on the actual trade. Maybe a little better than 25%. All right, here on uranium, it looks like it's struggling. It doesn't look like we're going to get the close that we want above 32.21 for the potential breakout trade. But like I said, it'll be late this evening. Right before the close is when we'll determine whether or not we're going to take this one. So I don't care what it does intraday, as long as it closes above 32.21, I will get long via call options. Is there any specific thing that anybody wants me to look at? So we like Apple, but we're trying to give Apple a little bit of time to find support. It does look like it is trying to find that support with yesterday's close, even though it was a lower close. As long as we don't close under 181.71, we could potentially look for a long back up to 187, as that's where the gap happened. I mean, you gapped all the way up based on earnings and the fact that Apple is going to do the biggest stock buyback in history. I think it was $150 billion that they plan to do stock buybacks with, which is absolutely the biggest ever. But what we're looking for on Apple is for it to find support and then kind of curl back around. Something similar to what Google did. See how Google ultimately had that big gap up, and then you had 3 days of downside, and then it kind of curled back around. That's like kind of sort of what we're looking for on Apple. So today's close on Apple will be huge. I know there's a big gap here, but Gaps don't have to fill, guys. There's gaps in Apple that have never been filled and never will get filled. So gaps don't have to fill. This thing could find support here and just roll right back up. Huge consolidation formation here. Love it. Even put in a little bit of a bear trap and then boom, took right off. But we'll keep an eye on this also at the end of the day. See where this is at. Maybe if we don't get that opportunity on uranium, we'll get it here. Back over to Bitcoin, because I did take the long position there. It's currently up 13%. But it's heavily leveraged. I think that's it. Yeah, it's 35x leverage. 3.5. Basically, I took it off a daily support here. It's yesterday's close as well as today's open. So remember, if you want to get long, you want to get long at support. This, looks pretty okay for a consolidation as long as it doesn't break down. If it breaks down and takes out this support here, then we'll look for it to come probably back down to 61,179, which is just old daily support from way back here. What's up, man? It says Felipe. What do you think of Near Protocol? I've been heavy on it since $1. Any targets for this run? I don't know anything about the protocol, but I can definitely take a look at it for you. You've been in it since $1. I mean, fantastic stuff, dude. Fantastic stuff. Obviously, I mean, you're up. It's from $1 to $7 is a massive gain. So you're up really, really nicely on that. I would probably shed some, but I mean, it does look like it's trying to make like a cup and handle formation here. So, I mean, as long as it's moving up, you're okay. But I would definitely get my stop loss up because, I mean, this is on, no, it's not on log. It looks okay. I mean, longer term, it looks good. I don't like that it lost over 50% on that move to the downside, but I mean, it's a, what do you call it? Like, it's a crypto coin, so these things are extremely volatile. A 50% drop doesn't necessarily mean anything. Is people buying it? Is there a reason why it's being bought up? That's generally how I would explain to people how to trade meme coins. If it's got news and it's got a legitimate reason for growing in value, then yeah, you can get long. But if it's just popping on no news, then those are the more speculative driven rallies. You got to be careful. But it does look like it's trying to break back to the upside here. So it does look good. But if you cannot close above 768, which is just this candle's resistance level, if you can't get back above that, I would seriously think about taking some profits. But I mean, if you held through this 50% decline, then you're probably in it for the long haul. But I would definitely shed some of that position. I would take some of these profits that you have made. You have made a lot of money on that trade. As far as P&L wise, it's up big. 616%. Not bad. Not bad. Did good. Good stuff. As far as breaking the previous all-time high, yeah, I mean, it could. You're not far from it. Right? You're not far from it. This is the previous all-time high, unless I'm looking at a chart that doesn't have as much data. If this is the all-time high, then yeah, you can absolutely break back out and take out the all-time high. I like that it's pushing here instead of, just continuing to make lower highs and lower lows like Ethereum looks. Now, if Bitcoin finds support here and starts to push back to the upside, then that could help near. It looks like they topped out pretty much around the same time. So, yeah, I think a move up on Bitcoin could absolutely help this. But it is struggling today. It made its all-time high on March the 15th. Bitcoin made its all-time high on March the 14th. Yeah, I think if Bitcoin continues to push today, then near could absolutely take out the all-time high. Yes, it could. All right, so the Bitcoin trade's working out pretty nice for now. We'll see if the daily open is able to hold. But I do like this little push out of this area here. If you're just joining us live, we took the long when we were pushing right here. This is daily support. Just looking to see if we can trade it back up to around 64, which would be the top edge of the range. This range right here. But if we can get it up to there, that would be nice. I'd take profits, move my stop to break even. All right. Go look at TLT. Nice push on TLT. We're also long TLT. Doing pretty good. Pretty good, pretty good. I like to see that. If it can push up just a little bit further and I can get a close to a 50% return on that option trade, then I will close the position. I think if it traded up to 91.40, we could probably do that. It would take the year-to-date P&L up to $800, which is, it's just a small account. So that would be what, a 15% return, 16% return on the year-to-date P&L. Oil is struggling to break, but it has pushed lower than daily support. So that's probably not going to happen today. We'll keep our eyes on it. Let's look at Tesla. What's it doing? I haven't looked at it in a couple days. It's trying to hold support here. 179.99. If it can hold support, we could potentially look to get long on Tesla. Let's see if we can build out the position here. With the declining skew, hopefully that should help. Ooh, no. The implied volatility is going the wrong way. So we will not be able to build a trade on Tesla. Not this far out. Maybe if we go a little bit closer, we can get a $2.50 wide strikes. Implied volatility is still going, it's still dropping. You don't start to climb again until you get almost all the way out to the expected move. And I don't like to take trades that far I like to get in right at or in the money. That way I don't need it to move very far and I can start taking profit. Where do you see support for Baba, and can you look at Mara? um, Baba obviously is getting a nice push based on the fact that the Chinese ETF got a huge push to the upside. The near term support would just be the old resistance level. And that old resistance level would be right there. So around 78.23. And then the next place I would look would be 76.43. If it closes dailies under both of those levels, then you're probably going to be testing lower around 74.78. Which at that point, I don't think I would like it, because if it gets all the way back down into this region here in the next few days, that's going to be pretty heavy sell side. When you break out of a range like this, you generally want, this is the range I'm talking about, you generally want to see bullish continuation. So keep an eye on this near term level right here. And then on Mara is just, I think it's a short covering rally. I think this rally right here is just a short covering rally, because that was a huge move lower. I mean, it's a 57% move. That's a fantastic short. So I think you're seeing this little rally here is probably because shorts are covering. Now, it is in a range also. There's your range. I mean, that's a big, wide range. So it could push up to the midpoint of that range, which would put it around 23.43. But it's got earnings coming up on Thursday. So right there, you're going to pay a very big premium, a huge premium to trade more options. You'd be better off buying the underlying. The implied volatility on this thing is always above 100, always. So you definitely don't want to be going long options when your implied volatility is up over 100%, because you could be right on direction and still lose money. It's unlikely that you would lose money because this thing does move a lot. You know what I mean? It does move a lot, but you got earnings coming up on Thursday, so it's literally a gamble. The expected move is up to $22, and the expected move low would be around 18. It could absolutely breach that one standard deviation move here and here. So, I mean, if you wanted to try to just do a YOLO play, you could, but you're going to lose every cent of this, every cent, if you don't get in the money. The options are actually cheap enough on the put side and the call side. You could get in this trade on the put and call side for $80. And you can see the in the money is above $80. So you could get like a $50 or $60 return. It would actually, yeah, something like that would be okay. But I mean, if you just want to yellow one side, you'll obviously gain more if you're correct on direction. Nobody knows which way it's going to go. If it were me, I would probably bet that it goes down, just because like a lot of the tech options or a lot of the tech earnings, they actually beat in earnings but still ended up losing value. Excuse me. So I just don't like to do that because it's earnings is such a gamble, right? It's just a 100% complete gamble. So it literally would be just a YOLO trade. I definitely would not be buying it up here, but that's just my opinion. Remember, Bitcoin's had the halving, so the mining companies are going to struggle to make money now because the halving cuts it in half, and it makes trying to solve the problems even harder. So if they were struggling to make money in the last couple years, they're definitely going to struggle moving forward to make that profit. But whenever you're trading this close to earnings, it's a 50-50 chance. So that's pretty much what I think about Mara and Baba. Felipe says, appreciate it, man. You're welcome. It's my pleasure. Interested in your overall thoughts on the market direction given one white collar recession. White collar recession. Don't know anything about that. Dollar is still expensive. Election year, housing. Well, I kind of gave pretty much my overall look on the marketplace is bullish. Because the VIX is back down to lows. I don't do macro analysis like that because like I follow very many big name macro guys and they're wrong just as much as technical traders are. You know what I'm saying? Like they literally don't know either. They literally have no clue. But right now, the overall market is bullish. It's bullish. It's structured bullish. Let's go look at the SPX. That is the benchmark, right? That is the benchmark for the overall market is the S&P 500. It's bullish. This was nothing more than a 3-week correction, which it needed badly because for like 21 weeks, it only had 2 down closing weeks. It needed, a few weeks of pullback. It got it. And now it looks like, as long as the bond yields, as long as yields keep falling, it's going to go up. My opinion on the dollar is I think dollar's going lower based on macro, simply because since we did get, a good jobs print, jobs on the job, or on Friday, we got the NFP and we got the unemployment rate. All of that stuff is good and it worked out good for the Fed. So, they're predicting a rate cut in September now. Rate cuts is generally bearish for the dollar. Also, another bearish technical, or another reason why I'm bearish the dollar is because of oil. Right? We shorted oil right here. As long as oil is weak, the dollar is going to be weak. I mean, the dollar and oil they're not 100% correlated, but they look very, very similar. All right, let's see here. Where are you? There you are. They look very similar, don't they? I mean, just look at this section right here. Look at this. It went straight up, and then oil rolled over, and then the dollar rolled over. The dollar got a bid, then oil got a bid. So it's like sometimes oil will be leading the dollar, and then sometimes the dollar leads oil. So, I mean, yeah. That's my overall look on the market. My macro view is right now it looks good. As long as tech keeps making money, it's going to be difficult for the overall market to roll over. We can go look at RSP, which is the equal weighted S&P 500. This means that it It's every stock inside of this ETF has the exact same weighting. You're at all-time highs. You know what I'm saying? So that is absolutely means the broader market is correlated. I keep hearing people say, "Oh, well, it's only 8 or 10 stocks that's making the S&P up." That's true to some extent, but this right here is an equal weighted ETF. This means that their tech does not have any more weight than any other stock. It's equal weighted and it's at all-time highs. It's already made fresh all-time highs. And you are currently trading above old all-time highs. That is bullish. That is very bullish for the overall marketplace. So literally, as long as everything keeps working out, you can look at this as one huge range and pretty much say, you could see the market trade all the way up to there, right? A measured move just based off of that accumulation range. Longer term, this thing would be at 195. But that is as long as everything keeps going okay. Now, we are starting to see some slowdowns, but that's what the Fed wants, right? The Fed needs those slowdowns in order to essentially cut rates. That's when everybody's going to start freaking out also. Because generally, whenever you have an inverted yield curve, which we do, I'm not negligent to that fact. I do understand that we've been in a long period of time where the yield curves have been inverted, and generally, at least the 10-year, 3-month yield curve has generally called a recession every single time. Right? So if it's going to do that again, then ultimately I expect we could potentially see a recession, but it's 6 to 18 months away. You know what I mean? This has to get uninverted before the recessions usually show up. And we're a long ways of that happening. Yields are getting pummeled today. Pummeled. I mean, could this just be a pullback and it's going to resume? Yeah, it's possible. But I mean, the VIX is not saying that, and the skew is not saying that. So whenever your skew is elevated and the VIX is elevated, then you could be bearish, right? But you do not have an elevated VIX. You had an elevated VIX, but it's back down. It's back down to 1350. Obviously, it's not at 1270 or even as low as 1193, but just a few more days, it could potentially be there. And then the skew is dropping with the VIX. And that generally doesn't happen. Usually when the VIX is up, the skew is down. Usually when the skew is down, the VIX is up, right? But they're both dropping in tandem. What the skew measures is it measures hedging activity. That's what the skew measures. It measures heavy hedging activity. So anytime you see a high skew, anything above 130 is generally considered a high skew. But I would say probably go above that. I would say probably 145 would be a better indicator of a high skew. That shows you that more people are selling calls and buying puts than literally, it's considered hedging activity. And whenever you see strong hedging activity, then you got to have a little bit of a bearish stance, right? Why would so many investors start to hedge their positions if they felt as if though the market was literally about to roll over? Well, you can see since we peaked in February of this year, the skew has been on a one-way road to the downside. That literally shows us that less people are hedging now. So what does that mean? One could arguably read that to be bullish for the marketplace. Just that's about as far as my macro goes. And then just literally looking at how the market's been trading. Like last week, it traded down to the weekly expected move and then freaking bounced like perfectly. The week before that, it struggled at the upper edge of the expected move. But I mean, it's bullish. We're getting ready to hit the top edge of the daily expected move. So it's getting closer and closer where you might see profit taking start to happen, but I'm not looking for it to roll back over and make new lows. If it does pull back, I would say this week, it would probably pull back to around 50.66 max. Max. I wouldn't doubt it a bit if it doesn't close the week right there, unchanged on the week. Because we don't have not much in the way of high event risk news this week. Last week was a very heavy news driven week. But we made, the majority of the money in the small account last week based on that oil short and the S&P 500 long. And then if you want to, technically analyze, is this bullish or bearish? I mean, you're up on the year. 2024 year to date, you're up almost 8%. Right? That's bullish. And then secondly, you're above the 618 retracement from the all-time high to this low. That is also generally pretty bullish. So, I mean, technically, I think the market's bullish. Hopefully that helps. I don't know anything about Russian CBDC. I don't think a Russian CBDC is going to affect the overall market in any way. But it is an election year. Yes, yes, yes. But all that's later on, right? November. We're just now starting Q2. No, not really, actually. We're getting ready to... June is the end of Q2, right? Yeah, we got 1 month and 22 days. I mean, that quarterly candle looks bullish AF to me. Bullish AF. So, I mean, I don't know. It's just everybody's going to have a different approach to how they view the overall market. But all you got to do is look at that equal weighted S&P 500, not the Russell, because the Russell is small caps. The Russell is not the overall market. The S&P 500 is the benchmark for the overall market. So the best way to get a feel on the overall market is to look at the ticker symbol RSP. That's your equal weighted S&P 500. That way, everything gets the same weighting, tech, healthcare, everything that makes up that sector or that index gets the same weighting. And if you're at highs, it's bullish. Can you take a look at WTK USDT? I don't know. I mean, which exchange you're on. Yeah, I mean, it's absolutely mooning. It went from 2 cents to 8 cents. So it's definitely getting a bounce. But this is probably just a shitcoin overhaul. It's up 230%. Can it continue to go up? Of course, we've seen altcoins go up 1,000%. Is this one going to go up 1,000%? I don't know. It's impossible for me to tell you, has this thing topped out or not? You generally don't want to short things like this because you're going to get ran over. most of the time until you see like a blow offish kind of top. Then one could look to get short, but I wouldn't get long here either because it's already up 230%. The trade would have been down here at support. I don't know how long you've been following my work, but most of the people that's been with me for a long time know that if you're looking to buy something, you buy it at support. And bearish daily and bearish weekly closes is support. You could have bought it there. You could have bought it here or waited for a potential trap to reveal itself, which it did on this day. Then you could have simply bought it right there. Now, I know that's in hindsight, but that's exactly the way we trade. I just took a long on Bitcoin during this stream based on daily support right here. All right? Literally, that's exactly the way that I trade. Right there. And we literally did get to my profit target. Unfortunately, I was too busy running my trap and I missed the exit. Yeah. But I was literally just looking for it to run right back up to the top of the range. I said 64 something is where at 64.2, I think is what I said. Hang on, go to the hourly. Yeah, I mean, it ran right to my target. I could still take profits. I mean, the position is up 39%. So, I mean, yeah, that's literally how you do it, right? Sometimes you're going to be right. Sometimes you're going to be wrong. It's about risk management. As long as you are managing risk the right way, you are, everything else is going to fall right into place. Everything else is going to fall right into place. TLT moving up a little bit. It looks like it, it could be topping out here as well. What's that position up? $69. It's 1% of the total accounts. Equity. Yeah, we'll give it a little bit more time, see if it can continue to run up. But yeah, I mean, when you've already ran 200 and some odd percent, I would probably just leave it alone. I mean, because you generally miss the opportunity, right? Once it's already made the breakout and ran for 8 days in a row, you've generally already missed it. Now, if you are looking to short it, remember, wait for that sign that says, hey, it's probably topped out. When will that happen? Nobody knows. Nobody knows. This could be a literal pump and dump, or there could be good news. I don't know. Looking at the overall chart, this thing looks like garbage. But it is running right now. Excuse me. Thanks. White collar recession is tons of tech are laying off at the moment. Yeah. I got you. I kind of had a feeling I knew what you were talking about. I mean, Tesla just laid off a bunch of employees, and so did a lot of other tech. Yeah. But, it is what it is, right? We're in a high inflationary regime right now. It's difficult for people to make the right calls and stuff like that. So I generally just take a very simple approach. Are we up on the year or are we down on the year? If we're down on the year, then hey, it's bearish. If we're up on the year, we're bullish. And even like if you were looking at the broader market and using the IWM to show you that, you're up on the year. I mean, yeah, it struggled here, but to me, this looks like an accumulation formation. You have a large range here and you've broken out of it. It's struggling to get any kind of momentum, but once it does ultimately break out, you're probably going to see a rather significant move. Now, the thing with the small caps is they are the companies that generally will struggle in a high interest rate environment, right? Because they're small cap companies. They literally are in debt. Some of them aren't even making money yet, and now they have to pay more on interest than anything, and that could literally cause a lot of them to go out of business. But the broader market, that S&P 500 is your benchmark for that. All right. If there are no other questions, I'll finish the video up by saying this: there are a couple things that we are going to be watching for the rest of the day. Obviously, I'm still holding the long on Bitcoin. We'll see if that ends up working out today. We're also watching uranium. We want to see a daily close above 32.21. So 32.21. If you're 20 minutes away from the market close and you're trading well above 32.21, you can pretty much say, all right, will it fall, in the last 20 minutes? Probably not. You could probably get long last 15 minutes of the market, but it has to be above 32.21. We need to see a daily close above that. And then if it gets that, we'll look to buy a 38 days out and the $32 strike call option. And then tomorrow, if it gaps down, we'll exit the position. So we're watching this URA. We're watching TLT. We're already in that trade, so don't get long TLT. You missed that trade. We're also watching Apple to see if it can hold daily support at 181.71. If it does, we could potentially look for a call spread. Let's see if Apple is actually going to give us one. Not really. Not far out, but we could do it, closer. Yeah, these are cheap enough. These are cheap enough to just, instead of putting on a spread, you could just simply buy a call, like the 182.50 call. And we're just looking for a small pop in the next 2 days, right? Back up to 187.15. And what else was it that we were watching? I think that's pretty much it. The trade desk, the breakouts already happened. Well, not really. I don't know. I don't know. We'll keep this. We'll also keep that on watch, I guess. And the other was Duo, but Duo doesn't have weekly options, so that's not something I'm going to trade. So I'll just get rid of that. Yeah, that's pretty much it. Yeah, that's it. I can't remember anything else that we were watching specifically. Oh, Pepsi actually does look decent as well. It did hold support here, but yesterday would have been the day to take the trade because yesterday was the day it was testing the breakout or the area we were watching. Old resistance here. Nice hold of support. Yesterday would have been the opportunistic time to take that trade. We've probably missed this one. And another one I've been waiting to get long on is this one, but I missed it. I mean, I just missed it. That's all. That's all there is to it. This trade would have made so much money because it's 264 here and 304 up there. That's literally a $40 move, dude. Holy schmikins. $40. That's a big trade on options. That's a huge move. Just literally missed it. It's still kind of cheap enough, but it's got earnings coming up real soon. Last time it had earnings, it gapped down huge, and it still has not recovered from that. So maybe this one we could potentially do something crazy on it later, or closer we get to earnings. It's a very fast moving, very expensive stock. But the implied volatility is good on it because it goes up. Remember, we want the implied vol to go up as the strikes go up because we want to buy the cheap implied vol and we want to sell the expensive implied vol. So it'd be something like that. Boom. It's a $2.50 wide, so you'd be paying $1 for it, and your max profit would be $1.47. Not bad. Not bad. Or you could spread that out and make it a $5 wide, but it doesn't work on a $5 wide. It works on a $2.50 wide, but not a $5 wide. So we still may do something like that. It's too expensive to do a YOLO play on it. Right, where you can make infinite amount of money. It's too expensive for that. It's not the right stock to do that. Whereas Morrow would probably be your better bet for a YOLO trade on earnings. BTC costs $9,600. No, it's at 63,755. I'm not sure what you mean by 96K. Maybe versus something like the yen, it's possible. Uh, yeah, I'm not quite sure what you mean, Johan. All right, we'll go ahead and wrap it up. Thank you guys so much for your time. Make sure you guys trade safe. Make sure you guys trade smart. And as always, happy trading, everybody.